everybody, it's Chris here from Serene Education with the 4 majors in this update for the 30th of May 2013. Hi guys. Okay, very interesting this morning, just going over 4 majors just for the students on our chat this morning. And on the 4 majors in particular, we're seeing some really interesting counter formations on the daily. Here on the euro against US dollar, you can quite clearly see we've had a full week, if not longer, where price has actually found support now at this level. Roughly around the, what are we looking at here, 1282.60 and change. Okay, we are trading thereabouts around price support and resistance here at the 23.6 mark, which happens to be the fib 23.6 on our monthly time frame. And the fact that price has actually hesitated or stalled at this area here, the longer it goes sideways, the more likely we're going to start seeing buying power, especially for euro. The US dollar, you can see quite a bearish engulfing followed by bullish engulfing just recently. We had the same scenario just recently, a couple of days ago. All this at the support over here. MACD has gone blue over this consolidation period here, and the RMO has worked its way back to the zero line. Not above it as yet on the daily, but you can start seeing that there seems to be more blue happening intraday. R squared needs to catch up with 5 and 15 minute, but you can see that there's more buying sentiment potentially on the term that we're looking at, right? Let's not forget, while I'm talking about it, the Fed last week mentioning that they could start seeing a tapering off in their bond purchasing scheme. If that's the case, then is the likelihood of the US dollar starting to look for pullbacks now. We've got so used to seeing the Fed buying week in and week out since last September, if I'm not mistaken, when Bernanke said they were going on this $85 billion purchasing scheme per week. The equities market has really rallied because of that, and what we've seen is highs on the S&P, the FTSE, the Dow, etc., all making all these major highs. Are we going to start seeing that all tapering off now? So we're seeing, we saw bits of it last week when the news did come out, everybody started to speculate, and the US dollar did go through a bit of a tweaky moment there. But are we seeing this now becoming more of a reality? People starting to worry, well, hold on a moment, let's start to take profits now, and let's start to consolidate our moves that we've had recently with the US dollar, very strong US dollar. And are we seeing now the case where the euro, sterling, Swiss franc, the yen all starting to find some sort of support near term as the US dollar starts to lose their momentum? And that's what we're seeing here. I mean, a full week and a bit of support now on a daily here on the euro against US dollar. We're seeing price hitting, reattempting the 1300, which happened to be a price support and resistance level just recently, failing to get above that. But the longer she tends to move sideways and finding support here, the more likely she's going to start getting more people on her or looking at her interestedly and going, well, let's start to purchase, because there's clearly a defining bottom here potentially. So what we want to see now on the euro against US dollar is particularly seeing price moving higher above all this, getting above this 1300, and psychologically we could see price moving back up towards the 38.2 now, which is the prior support and resistance level high. You can quite clearly see a lot of bearish engulfing tweezer top formations at this level at 1314, but that could potentially be our target for the foreseeable future. We're looking at 190 odd pips here to this level. There's a lot of moving averages in the way and all that type of thing, but the longer price moves sideways, the more likely price is going to start building on that sentiment. We are not too far off from where price was initially here, a support level, and from where the bottoms over here, that support bottom is to the bottom, or the fib ratio bottom, we're looking at 94 pips. So in relative to the long term, that's quite close. So the longer we see price moving sideways here, or euro edging sideways, the more likelihood is that we're going to start seeing more buying sentiment coming through. And what we do need to see is that reflected on the chart. So if we can wait patiently for the daily candle to give us that sentiment that we should be looking upside, and that should be in case of a nice bullish engulfing candle, then it will tell you that near term the sentiment looks favorable for the for euro to gain strength against the US dollar for the foreseeable future. On to sterling. Here again, same thing. We've had 1, 2, 3, 4, 5, 6. We've had a full week now where price has actually failed to break any lower lows. The current low here at 150138, and you can see the MACD is really in this down move, really starting to move back. The sentiment moving down is waning now as we head towards this price support and resistance level low here, and we are trading below the 23.6, which happens to be or constitutes to that major support and resistance level area back at the 15300 mark, which goes back to 2010. We're still below it. last arrow was a red, candles are red, but you can see the buying power on our indicator box over here more blue. So there's intraday buying support, and you can see yesterday's bullish engulfing candle cancelling out the bearish engulfing candle, which actually stopped at this level. So now are we seeing now, like the euro, a nice strong bottom forging now for the sterling, and are we seeing the US dollar waning because of that? RMO is making higher histogram bars, which tells you that the sentiment is looking upside. What we can look at the moment now is to see if price can get above this 23.6 near-term area here. You can see price actually consolidated it. If we can get above that, then we could be looking back up towards the 23.6 monthly February tracement area, which is a good 120 pips away. Take away the spread. So there's enough in the tank over here to see further upside movement, and you can see that the R squared is complementing this buying sentiment intraday. So therefore, we should be looking for buying opportunities for the foreseeable future. There's a bit of news out today of the US market later this afternoon. Are we going to see that reflecting? We've got prelim, the GDP quarter-on-quarter figures, very, very important for the gross domestic product figures for the US market. We've also got the unemployment claims. They're expecting that there's going to be 2,000 more unemployment claims out than the previous figure. It was 340,000 the previous figure. They're expecting 342,000, so a slightly bigger unemployment claim figure. If it comes out even higher than that, well, then the US dollar is really going to start to wane because of that. We also have pending home sales figures month on month. That's they're expecting a 0.2% drop. So crude oil inventory is another one over there. They're expecting less people storing oil, or companies storing oil in the US, which is all negative signs. So if that all comes true and we see higher figures than the forecast, that's all going to lead to the US dollar negativity. And that means the euro, sterling, Swiss franc, and the yen are all going to capitalize on that. So here in sterling, you can see quite clearly also a bottom here, tweezer bottom at the last one. Yesterday's bearish, bullish engulfing candle cancelling out that negativity, and you can see on the Asian session prices moving higher. Ideally, I'd like to see price trading above this 15,198 intraday, because you can quite clearly see that's happened to constitutes to a nice support and resistance level intraday. So that can be our gauge stick intraday. On our 4-hour and hourly chart, there we go. I've got a buy signal on my hourly, but you can quite clearly see the 23.6 is still above me. So I'd like to see that being broken. Get a nice bullish engulfing candle break above that 23.6. Then intraday, I should be looking to the upside. As I mentioned, back up towards the 23.6. And where the 23 here is to that level, you're looking at a good 120 odd pips and change. Okay, so let's move on to the US dollar Swiss franc. Here again, daily. Look at that, guys. On our daily, we've had an upside followed by bearish engulfing. So this is a tweezer top. Price moved lower, failed to break the price support and resistance level highs here recently. And what has price done again? She's moved high again. However, yesterday's bearish engulfing candle has now taken all that sentiment away. You can see the MACD has now since moved back below the zero line. RMO has clearly moved lower, still above the zero, so still positive. You can see the candlesticks are still very much blue. However, you can see a lot of indecision over the past week or so, as price is failing to find that sentiment now to rally above 22.6 and to remain above 22.6. If she maintains above 22.6, then we can look upside. 23.6 to the next zero line, you're looking at 254 pips. Higher than that, well, you're looking at the long-term target, which is a good 1,590 odd pips to the upside. However, you can see that the sentiment near term over here is waning. Now, the US dollar is finding it very difficult to find people to keep purchasing her. And with the Fed announcing last week that they're going to start tapering off on their bond purchasing scheme, etc., like that, we're starting to see this ripple effect now. We're starting to see a lot of hesitation, a lot of jitteriness on the market, and that is clearly showing now on the actual chart. So you can see a lot more negativity intraday, and the R squared is complementing. We like to see the R squared complementing a lot more of this negativity. And we have an hour and 30-minute complementing the moment now, but we'd like to see that 5 and 15. But the longer we see this negativity occurring here, the more likely this is going to remain further red, and the R squared is going to complement that sentiment. So as it stands at the moment now, we'd like to see this price support and resistance level area here at 95515 being breached, and the RMO and the MACD to remain below zero, and the RMO to cross below the zero line, and then we should be looking for further shorting opportunities. If anything, back towards this 23.6 to below, which is my weekly Fib retracement area here, which is a good 250 odd pips away to the downside. The only thing over here is going to stop this the US dollar failing or further looking bearish is this current support and resistance level. Quite clearly a major resistance level in the past, and just recently a support. So 95516 is going to be our intraday support level. If she gets below that, as we go into this afternoon with all that US data, if we do see that being breached, then we should be looking for shorting opportunities for the foreseeable future. Last pair of the day is US dollar Japanese yen. Here we go, daily chart moving higher, but you can quite clearly see recently prices come unstuck, breaking above the 50% fib retracement on our monthly areas, which is a really positive signal, but since then not really moving any higher. You can see last 2 days very indecisive, one bullish engulfing followed by bearish engulfing. This is constituted to a tweezer top at a price support and resistance level, not a really good sign. And you can see the Asian session, we had a bit of buying power to start with, but you can see it's now particularly wanting to use the low end of that. So we're seeing the US dollar here again, and look at the indicator on the indicator box, guys. R squared is blue across the board, so long term looking positive, in the R squared complements, which is fantastic because we have been in a very strong uptrend on the US dollar against the Japanese yen since September of last year. However, intraday you can see negativity, and the R squared is telling us that the negativity that we're seeing intraday is genuine. Okay, so we're seeing selling. MACD is very much below the zero line, and the RMO is making lower histograms, which is telling us sentiment is waning. The only thing that's going to actually stop us from seeing any further negativity is the 50% line. So from where price is trading right now to this level, you're looking at a good 86 pips of profit. So intraday, you can see price is trading below this current support and resistance level. So if I go to my hourly, you can see straight away, I get that selling indication. And you can see that current support and resistance level here has been breached over the past couple of hours. And as long as we stay below that, then we should be looking for negative sentiment, because you got my last arrow is red, candlesticks are red, RMO is below the zero, my MACD is below the zero, and it's telling me that I should be seeing true negative sentiment. So I should be looking for shorting opportunities, and those shorting opportunities would take me back towards this 50% line, which is a good 90 odd pips away from where price is trading right now. So look to see what happens in the US dollar today, guys, because everything on the four majors is looking very, very negative for the US dollar. Okay, the candlestick formations are painting a negative scenario for the US dollar. If the news this afternoon comes out and it complements that, then we should be looking for a change in market sentiment long term potentially, and then we should be looking for shorting opportunities against the US dollar and buying opportunities against the US dollar for any of its crosses. So long euro, long sterling, long Swiss franc against the US dollar, long yen against the dollar. So very, very important now to bide your time. Look at your cross pairs. Australian US dollar might be US dollar Canadian is another one. We've got oil inventories this afternoon, so it'll be interesting to see the US dollar Canadian pair together, working together, because if the US dollar is having a bad day, and that's going to be reflected on the Canadian market. So very, very important. That's for today, guys. Short and sweet. A very interesting day today. Make sure that you are aware of what's likely to occur. The US dollar is looking a bit negative after all that news announcement last week that the Fed might be actually tapering off its QE3 purchasing plan. A lot of speculation, jitteriness on the market, and that's actually showing up on our candlesticks. So let's look at that now as something we should be looking towards. See if it actually occurs today. If it does, then it's going to be the catalyst for great opportunities to trade for the foreseeable, for the remainder of this week and going into the new week next. Okay, back it up sound money management, guys. Keep it simple and trade serenely. Take care.